SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. We're going to have a look at Jasmy. That's right, I noticed that my last Jasmy video got watched loads of times talking about the pump signal, which is still in play, I have to say. We're going to look at the overall market first of all, then we're going to look at Jasmy. So we get a bit of an overview of stocks, commodities, Bitcoin, Forex, and then go back into Jasmy. That's right, we're going to see what's going on. So first of all, we're going to start with the dominoes, which is the Forex side of things. So rather than look at the Dixie, we're just going to stare at the euro to dollar, because it basically is the inverse of a Dixie. It's the main component to it, and all we see here is basically continuation. We're looking at it on a 4-hourly. We're below major moving averages on the 4-hourly, but we're above this major horizontal 109.4 Pump City FM. And if we go to the daily, we can see that moving averages are starting to cross above there now. So we've got support on the Bollinger Band Center, which is where we got support yesterday. Very nice, tasty retest of that. Not yesterday, obviously. The last trading day. And today we are the 10 exponential, where we're getting a bit of a bounce from at the moment. Again, expect further downside on this one is no problem at all. All of this is just continuation of the strength of the trend for euro, without any bearish divergence, not even any hidden bearish divergence, nothing of the kind. It's just trending up, trending up, trending up. If we start to close below the trend line and the Bollinger Band Center, basically 109.4 wrecked City FM, then yeah, we can entertain moves back down to 108.5, basically 50 exponential, maybe even 200 exponential, but basically losing this area might actually be the start of a consolidation. But that's fine, because we're not seeing that at the moment. All we're seeing is higher highs, higher lows forming, and the trend that's strengthening. Let's have a look at the S&P. So the S&P, again, yeah, this is the futures market, but basically what we're seeing is a rebound from a golden cross retest on the 50 exponential moving average, and going on to try its hardest and maybe even achieve it. I mean, on a candle body basis, it did do it, has done it. We're looking at new highs on this. That's right, absolutely new highs. So that again, it's done exactly the same as Bitcoin did, moved down into the 50 exponential and rebounded from that. Again, and by doing that, it continued with the pump signal that was in play on the Ichimoku cloud. So nothing to worry about there. And gold, we're on gold's 4-hourly at the moment. That's right. So we're moving down into this 200 exponential, sitting roughly around 1971. And if we take that to a daily, there are moving averages a bit further below that, around 1955. If we get that 50 exponential retest, it might be doing the same thing that we saw with S&P, and also the same thing that we saw with Bitcoin on the daily, which is basically a move into the 50 exponential and then a rebound from that. So let's think about Bitcoin now. So Bitcoin is below the Bollinger Band Center and your 21 and your 10 exponential at the moment, like that. So it is pulling back at the moment. The wicks usually tell a story. This wick's telling a story saying that the sellers sold around 30 again. There's 30 is like a major psychological level. I wouldn't say it's much more than that, to be honest. We've got people selling basically on the dot at 30 here. Sell orders at 30. That's Captain Noob Master style sell orders, because they're not really correlated to anything other than a perfectly round number, really. Ever so slightly front run. So it is what it is. And it's nothing more than that. If we think about the daily, we do entertain the idea of pulling back further to 28,000, maybe 27,700, basically back down to those moving averages. But if we think about the 4-hour at the moment, we had this big sort of, I suppose it is big, rejection from the Bollinger Band Center down to a 200 exponential, and then a revisit from that on this current candle body, 3 hours in. And again, wicks are telling a story. So this is a decent wick so far, so good. Just as we speak, flickering red. Again, until the candle body closes, we can't really we shouldn't really try to work out what it's going to do. But if we do lose this area, it's not a big deal. Like I say, the 4-hourly is going to show us where we can go down to. Now, we do have this area, again, based on a horizontal time frame. We've had very decent responses from it, but it's also backed up, or was backed up by that moving average. But if we were to lose that, the next horizontal area before we really do break down is around 26,600. Now, without turning my chart into a zebra's back, I'm just going to leave it, for everyone to think about and remember. And it's not the most It's not the hardest of all supports, but it does exist, and it's around 26,600. And if that was to be lost, then I would say, yeah, we break back down to below 25,000 and beyond, well, maybe beyond. A longer, more drawn out consolidation would be required at some point on this chart. But for the moment, I still favour the upside, as the daily is still diverging with the 200 and the 50, and we don't really have anything to particularly worry about at the moment. But again, you know, the reason we look at all these things before we look at our precious Jasmy coin is to get a good idea of what it is that the overall markets are doing. And just in summary, the S&P is reaching the top of a Bollinger Band, so a pullback might be required at this level. Again, we're looking at a trend which is technically strengthening, and so I'll be in favour of this moving up, and I've said it for a while now. I believe the bottom is in for the S&P. I said it at the time, still believe it to be the case. Euro, again, you know, is nothing to be concerned about this, not yet. And if we start to break down from this, then yeah, I'd say that this would be the general direction of all markets, down, down, and down. But for the moment, it's not the case. And gold being my favourite asset when it comes to correlation to Bitcoin at the moment, yeah, we're pulling back for a likely rebound around these levels. Yeah, roughly around this kind of zone, really, within a few percent from where we are right now. So why I'm saying all that, for those who don't watch this channel very often, I say all this because markets are pretty correlated, and they have been for a while now. And so what we should really entertain the idea of is short-term pullback and then a rebound to go on to new highs. That's basically what I'm saying. So a little bit further down and then a rebound to go further up. So if we think about all of that, because you have to think about that when you're trading altcoins, let's think about what that would do for Jasmy. So the other day I made that video on Jasmy saying, okay, first area of rejection is going to be your 200 exponential. So we had that, bang, bang, and a rejection from there. Okay, fair enough. The pump signal is still in play. It's not yet pumped. So we're waiting for the pump signal to actually play out. Now, it could be that it was a failed pump signal, because a pump signal takes you up to a major area of resistance. It's not like I'm going to pump to this amount. It just says I'm going to pump. And so it did pump, I suppose, and it pumped up to here, and it's been rejected from there now. So where are we at the moment? Okay, so as far as the relationship to moving average is concerned, it's actually stronger than Bitcoin when it comes to its short-term time frames. The 10 exponential, the Bollinger Band Center is where we're being supported on right now, with a view to maybe come back down to just below 0.6%. And again, all of this still reasonable when you're thinking about supports. Not really concerned about those being lost until they get lost. These are just opportunities to buy. So 0.6% is also your 200 exponential on the 4 hourly, so another decent support around this level. You can see how we scooped up around here and had a retest of it and then bounced from there. So again, that 0.6% being an area of interest. And we all know that Jasmy is pretty hardcore when it comes to pumps and dumps. So this is why you always have to look at this in the broader context. You know, we do think that the other markets are going to come down before they go back up. So we should think that Jasmy is likely to do that. And if Jasmy does come down to those levels from where we're at right now, we're talking about another 5 to maybe 7.5% before we get the rebound. So just below 6.6%. Now, there's no bullish divergence on this current portion of the downtrend of the 4 hourly. It's only just happened, really. We've just gone on to make a new local high on this short run. And so if we do come back down to these levels, these are the areas where I'll be looking at on the 4 hourly. And again, without any bullish divergence on the 4 hourly, it's based around a support. Nothing on the 1 hourly to suggest that would be the case. And again, there's no point really in looking at any other time frame, because they're not going to show anything, because the 4 hourly is, to me, the better place to look at. So when it comes to the main goal, really, which is to look at the market as a whole, a bit further downside before I bounce back up, that would still be in keeping with this portion of higher highs, higher lows. And we'll be looking for that to bounce and then move back up to the 200 exponential on a daily, and preferably at that point there, have enough power to break. The MACD is currently above the 0 point, so that gives it the bullish edge for us to turn back up and cross positive with price action. And so I'm still in favour of this actually working out. The 0.6% is an entry point, roughly speaking, you know, within a few percent of, within a few percent. And that is basically it. We'll check the higher term time frames, like a 3-day, if there's anything going on a 3-day. So the 3-day, what we would be looking for would be a major pump signal with closures, probably best to say closures above 0.8%. On a 3-day, that would be a powerful move, and you could see yourself trending back up into the 1 cent and beyond from that. We are just simply waiting for that cheeky span to close outside of the price action. Now, if it was to happen immediately, we'd have to wait to 0.8%. There's our cheeky span here. So this is where we are right now. Over time, over the next 48 days, 6 weeks or so to 2 months, yeah, we could start closing candle bodies above 0.67%, and then as time goes on, 0.63%, which is basically where we're at right now, to generate the 3 daily pump signal. That's what we'd be looking for. Now, if we're looking at moving averages on the 3-day, we're above all of them, which is nice. So that's a good start. Yeah, we're waiting for that pump signal. The thing about Jasmy, though, is that obviously the money flow index is still relatively high as far as just this. Yeah, it's higher than it is low. It's not massively extended. It's quite high. It's not massively high. But it's currently giving us a read of 76. Previously, we've gone up to 87. And prior to that, we're 84. So it doesn't actually like to be very high on the money flow index on this chart. It doesn't. And you will see overheated money flow index reads in bear markets as well as bull markets with much less volume than you would be used to in bull markets, because it's a volume indicator. It shows the size of order books, effectively the 24-hour trading volume going in and out. And obviously over the last 18 months, the order books have been sort of slowly dwindling away, haven't they, really, because people don't trade it, I got no money left, or they took all their money out and let the bear market continue. So yeah, we will see overheated money flow index reads, which is why in bear markets or in after a bear market, when bull markets begin, you get these sort of significant pumps that get given all the way back, significant pumps given all the way back, and we might be looking for a significant pump that gets given all the way back. That's basically just because the trading volume isn't the same as it was in the peak of a bull market, where you can actually continue to go up and up and up and up and up, just because the inflow of money coming into an asset. So you're not really getting that. You're just getting sort of you're just getting a trading environment. Now, for the long term, obviously, on a coin like this, it's not the greatest place to look at. To be fair, this isn't going to be a chart that we can really entertain properly. What a long-term approach to Jasmy would be. There's the holy grail idea that it's going to reach back up into a dollar or more, and I can't say if that's true. I don't know enough about the fundamentals on it. But as far as the chart is concerned, like lots of charts at the moment, it's reclaimed moving averages. It's currently above almost all of them. There's this 50 simple moving average, which is hanging around this level. We're getting rejected from roughly. I don't know where my 50 exponential's gone, to be honest with you. Don't know what happened to that. But yeah, we're generally in and you can see this. You don't really need me to show you this, but you can see this. We're in a symmetrical triangle, and the symmetrical triangle is a breakout or a breakdown level. It's a 50-50. So the resistance is the 50 simple moving average. The support is the 10 exponential moving average, and we're hanging around in this level. So we're looking to see breakouts from one way or another. A breakout of the formation above 6.8 cent would likely see a continuation up to the 8 cent. And if we get closures on the 8 cent on a 3-day, we do generate a pump signal that could, at that point, move us up into the cents, 1 to 1.2 cent zone. If we break down from here, then we'll be looking for supports roughly around the 5.5, and if not, we'll be back down to 4.6, where I think it's generally okay to think about buying this for the long haul. Now, I class Jasmy as a bit of a lottery ticket type vibe. The chart is wrecked city to the max, so I wouldn't really say that Jasmy is, based on any kind of TA perspective, the best thing you've ever seen in your life. Normally, there's your 50 exponential. No wonder we didn't see it. Yeah, I wouldn't really look at Jasmy and say this is a chart to get excited about. You can't really say that. The reason I say it gives me Matic vibes is just because of the way that it pumps and dumps and pumps and dumps. It can give opportunities to make serious cash in the short term. And maybe we should look into the fundamentals a little bit further to see if there's any reason why it might sustain higher value over time. But looking at it right now, yeah, a little bit further down before moving back up is reasonable. We got the symmetrical triangle here, and like I say, back down to 0.6% seems okay to try to take a bounce from. And if that bounces back up to our resistance from yesterday and beyond, and see where we go from there. Like I say, treat it like a lottery ticket if you're looking to buy into it long term. Short term, 0.6 seems reasonable to me. There's a fair amount of support between 0.6 and 0.59, so not too much difference below it. Anyway, long story short, yeah, a little bit further downside, bounce up, continuation with the rest of the market over the rest of this week. Thanks for watching. Hope you have a nice day. Take it easy.